Hey guys, welcome to Tiffindale Rescue Realtors. It is a day to have a chat about, I don't know what all.
What are we talking about? Oh.
We're going to talk about lending.
Lending competency, I suppose.
And what realtors should know.
Yeah. You don't have to. Yeah.
Yeah. That's all we're going to talk about really today.
That's what we're talking about.
How are you?
I'm good. How are you?
What's been going on this week?
It's picking up. Spring market is definitely here early. But yeah, we're actually starting to see some things back in the market, like sellers' concessions and...
that ties to the lending.
Yeah. But we've also started seeing some pickups where we're starting to see 1 or 2 offers on properties again. So...
Absolutely. That's a good thing too.
Mm-hmm.
Not 40. but 2.
Which is nice. That's a healthy multiple offer. I'm doing air quotes for people listening on podcasts. Multiple offer situation.
Interest rates seem to have calmed down a little bit. They bounce around a little, but they've calmed down to what the new normal is.
Volatile of up and down. So
houses are coming back on the market. Pricing is still a little bit challenging. Buyers and sellers have really, really, really opposite expectations right now.
Oh my God, yes they
do. The market is not going to crash and burn like so many people are promoting.
Well, especially in DFW, which has been, they've already projected this to be a super hot housing market for 2023.
Absolutely. So, I mean, honestly, I heard this yesterday. This is nationwide. Nationwide, we have less than 1 million houses listed.
Which is actually better than at one point last year. I remember you talking about this stat, and it was like 400,000.
Oh, yeah. Actually, it was 976,000, I think, is what was on the market.
So, I mean, that's better.
2 years ago, actually, it would have been coming into the beginning of last year, 2021, was like 460,000. So that part's a lot good that we just couldn't keep up. The market's keeping up better, but it's still kind of a seller's market. But if they're overpricing or making things overly difficult, they're going to be sitting on the market longer, and it's going to take a little bit more to...
And builders are an option again.
Absolutely.
And they actually like us again because they need us now.
Yeah.
But that's...
So inventory's coming up. It's going to be there, but it's going to still move fairly quickly. The more in the city you are, the faster it's going to go. If you're priced right, et cetera, et cetera. Gets a little slower as you get out into the country, which is totally reversed of the COVID pandemic where everyone was wanting to get out there.
Yeah.
Had I moved out to the country in COVID, I would be moving back into town, I feel certain. But so what does that mean for us? I mean, that means for us realtor type folks, we need to know about lending. Let's start with...
And options.
Option periods, home warranties, things that you can get back in your contracts that help your buyers, and really a lot of times they help the sellers too. But let's start with agent-to-agent issues.
Okay.
Agents, if you've got a house you're listing, this works both ways. If it'll go FHA and VA, put it in MLS that way.
And
if there ain't no way it's going to go FHA and VA, put it in MLS that way.
And I'm going to elaborate on this a little bit because I want to kind of touch base to back where people were immediately nixing. And this is not, I'm going to throw a disclaimer in here. We are not hating on FHA or VA loans. We actually love FHA and VA loans. We tell all agents that they need to know that FHA and VA loans are good. They are great programs, and they are something that you need to consider, because when we were in the COVID craziness, there were times where you would literally, if you had an FHA buyer, they weren't even being considered by the listing agent because, oh my God, FHA appraisers are awful, VA appraisers are awful, and they just get tossed to the side. Now, when we're saying this because there are actual limitations to VA and FHA loans for certain properties.
But they're not that bad.
But we do need you to know whether or not your property will go FHA or VA prior to it. So don't cut them out just because of the loan programs they are, because they might be more difficult, because they're not. If it's a new house and doesn't have any issues, no, all this stuff, which chip paint isn't even that big of a deal anymore.
That's right.
Huh?
That's right.
Yeah, so it's like, don't get caught up in the stigmas of what was yesterday, and don't think that these programs are bad. So that is my disclaimer there, because you know how people are. So
I love FHA and VA loans, and right now, at least most of the time, this is all subject to change day to day. Right now, your buyer can get a lower interest rate
with the government loans
by using a government loan, VA or FHA.
So, yeah.
Think about that. I haven't seen that in 20 years.
Yeah, and that's, hopefully, that's definitely one of those things where it's incentivizing people to go, I don't want to go conventional, I want to go FHA right now because it's a lower interest rate. So...
Well, I could go into all kinds of loan stuff that'll bore everybody. But
yes. We're going to keep it somewhat interesting.
The bottom line is you need to know about loan programs. So many of the myths you've heard are just not true.
Right.
There are certain very specific things, and I can't go through all of them, but call your loan officer and talk to them.
Talk about a couple of the big ones, though.
Okay.
Like something that you absolutely need to know. So like for VA,
VA is pretty easy.
They're actually sometimes easier than FHA.
And I've had no problems with VA loans. And by the way, your buyer clients have earned the right to go VA.
Yes, they have.
Sorry, I was preaching veterans.
I do agree with that.
VA appraisers do actually have a little bit more of an appraisal process. They're primarily looking for health and safety issues.
Right.
They have to have railings on stairs that are over, I think it's 3 feet. I'm again not an expert. So usually your front porch has to have a railing if you've got stairs, and certainly if you got stairs on the inside of your house, you got to have a railing. Well, most people want that anyway because it's just practical.
Or they have kids.
VA can call peeling paint. Most peeling paint is always the size of a $50 or more. And I've seen so many of the VA lately just kind of let it slide because of the demand.
But also, in regards to that, with the VA thing, there's a stigma that the whole WDI thing. A buyer can pay for their termite
WDI, by the way, just in case you guys don't know, is a termite inspection.
Yes.
VA loans are the only loan program in Texas that still require a termite inspection. Used to, the seller had to pay for it.
Yes.
That changed many years ago.
Yeah, so
but it's still out there in the world.
Still have the
realtors that your seller has to pay for.
And that's why I'm saying it, because there's still realtors that think that the seller has to pay for it. So they're like, oh, you don't want to do a VA loan because then you'll have to pay for the inspection for the termites. And no, you don't. No, you don't.
Yep.
Like, again, last week we talked about, staying up to date. This is part of it. Like, that is not the case anymore. So,
both government loans really require flooring.
Yes, you need to have.
So you can't have exposed subfloor. You got to have carpet, LVP, luxury vinyl plank. Painted concrete is okay now, unless you might have to argue with your appraiser on VA loans.
And I think that's something too that's very Texas specific. Because are there other states that really do the stained concrete, or is that really us?
Oh no, that's a real thing. I was watching my favorite TV channel, HGTV.
I feel like we started
the other
it though.
day.
I feel like Texas started the stained concrete thing.
Yeah, but again, VA loans, FHA loans, they don't. You have to have appliances. Now, there's a trick. Let's say your house has a stove and a built-in dishwasher, but the dishwasher's gone and all the other stuff you're supposed to have. Well, if that dishwasher's gone, they don't really require you having a dishwasher.
But you do need the things to actually cook, and that's what's required, is basically a stove and a range. Because you can wash dishes by hand, and
you can make your opening for your dishwasher a shelf, and that will meet their guideline.
There you go.
So there are ways
because open
around
shelving
some
is
of them.
in.
Even if it is on the ground.
Even if it is on the ground.
But there are reasons to do that. My biggest pet peeve is when it says it won't go FHA and VA, or actually it's really when it says it will go FHA or VA. Realtors, when you're putting it in MLS, if you don't know the guidelines, ask someone.
And don't just get check happy when you're putting stuff in the MLS and just get into muscle memory. Oh, yep, cash, conventional, FHA, VA, da-da-da-da-da. Because it's not the case all the time. So you do need to know that. And it is frustrating whenever you have a buyer that is FHA or VA and you get there and you're like, I wasted my time looking at this house. There's no way in hell it's going to go FHA or VA.
And if your clients say they don't want FHA or VA, that's where we come into educating them.
That's your job.
That is absolutely your job.
And sorry, you're going to have to deal with a little bit of confrontation.
And in our shifting market, FHA and VA are really a loan program that we should look at. If it's going to work, you will have clients that have to go VA. Not many, but if they qualify, they should go VA.
You earn, like Dale said, they earn the right to use a VA loan. Why would you not?
You'll have some clients that have to go FHA, not just necessarily because of credit score. Might be because of job history.
Or DTI.
Might be because of debt. It might be because of all kinds of things. Oh, or it might be because they qualify because the interest rate's lower. So don't rule out a VA loan. Don't rule out an FHA loan or a conventional loan. And for you realtors, sometimes in the lender world,
I feel like Dale's talking at you.
In the lender world, you might need a lender or two or three that you know and trust, or 4 or 5. Some lenders are good at this, some lenders are good at that.
And sometimes it's not even a matter of they're good at this or good at that. Some lenders offer things that other lenders don't.
Yeah, sort of.
So, well, or you know, like down payment assistance. Not all of them offer down payment assistance.
Not all lenders are approved to do down payment assistance. That is true.
That's something. Or some offer a bridge loan. You know, there's that not all of them do. Sometimes a bridge loan is more beneficial to your client if they're facing a contingency offer. So they might want to do a bridge loan. So know the different types of programs out there, know what lenders offer what, and then know what might be better for your client, because one lender might be able to get somebody approved where another lender can't. So, and some of them have the ability to go lower on credit score. So some of them are better at doing crazy manual underwriting because they keep it in-house. So that's important.
And we need to stay in control of that if we can, as much as we can. I won't pick on Rocket Mortgage. I won't pick on Rocket Mortgage.
Yes, he will.
But local,
I just call them .com.
Local lenders, well, .com lenders, period.
Yeah.
Local lenders are usually better, where you have a person to talk to, and that person can go, you know, I can't get you qualified. You might need to go do down payment assistance, for instance. And then we can help guide them there if we don't guide them from the first place to go to down payment assistance. Lenders are tough.
I do have something to add on to the .com lender too.
Maybe we don't want to bash .com.
I'm not bashing them. However,
if you do have perfect credit, perfect job, perfect everything, a .com lender might work for you.
I was about to say sometimes they'll approve people that really shouldn't be approved, and then you find that out later on throughout the transaction too.
Oh.
So
yeah,
you have to be really careful. Like, Zillow approved me. Should I edit that out?
Sure. No.
Okay.
Zillow is a lender too. They have a lender partner.
Zillow approved me, and then did they really? Did they? You filled out an app and they didn't look at anything. It's just an automated thing, and it's based off of what you put in there. So
your lender really is your friend.
Saying that.
So find a good one or two or three. Because again, I don't want to say they specialize in different things, because they don't.
No.
I also don't want to say that they all offer different programs, because they really don't. But some do down payment assistance, some don't.
Yeah.
Some do.
They don't offer different programs, and like they do all offer conventional FHA, VA, and stuff like that. So as far as that is concerned, those are all offered across the board.
Now they also sometimes put
programs
overlays on them.
Yeah.
Like one lender may only do a 620 credit score or above, where another lender might do 580 and above. Where if you really want to get into some low credit, there's some lenders out there that are actually pretty good. That'll go clear down to 500. Now those are all FHA loans. You're going to be paying for it, and you're not going to get a super low down payment.
And don't come complaining about your interest rate.
Correct.
Your credit score is 500.
Correct. And again, it's better to buy a house today than it is tomorrow.
Yep.
I reversed my saying.
You did. You kind of changed it up a little bit.
Because, again, this market is nice and steady and appreciation is happening. No, it's not 20, 30, 40, 50% a year, but it's going to be steady, especially here in DFW.
And a steady increase is healthy.
Yes.
That's what we need to realize, too. Too many people think that, oh my God, the prices have dropped. No, the prices went back to normal. They didn't drop, they didn't crash, nothing happened. It's back to a steady increase like this instead of like this, because this is unsustainable. You're gonna price out native Texans, you're gonna price out buyers, and that's where you get dangerous. And it's like, well, now nobody could buy, and that's when it really drops. So we needed this correction. That's the C word we use, a correction in the market. Okay, so I'm going to throw that one out there. But the other thing that you also need to kind of know about whenever you're looking at loans and lenders and things like that are, because we talked about this, we're starting to see more sellers concessions coming back. And I know that it's been a couple of years, so we kind of need to get back first on this because they are coming back, but specific loans can only get so much back for the concessions. So
first of all, for realtors that don't know what seller concessions are,
welcome. Hi.
It is the seller, paragraph 12, putting a number in there and the seller agreeing to pay that particular amount of money.
And that goes
towards the buyer's closing costs.
Which is so cool.
Which is super cool. Most of the time, there's not, there's kind of rules of thumb. Conventional loans will do 6%. FHA loans will do 3%. VA loans can do really almost any amount that is needed.
And then if it's a secondary
with some rules,
investment loan, it's
2%, depending on the programs and all of that. But check with your lender once they're or before you're writing that offer what that number is. And they should be able to help you out with that. It's really super cool. Really can help cash poor buyers get into homes.
And let's be real. We have a lot of cash poor buyers. A lot of people don't have a lot of savings, especially coming out of the last couple of years. A lot of people's savings were depleted, or they just really weren't able to contribute to their savings as much as they had before. So it is something that's really something to think about. Like our buyers don't have a lot of cash right now. So especially our first time home buyers. So that should be nice.
Back in the crazy days, it was like, oh yeah, well, you want closing costs, which we did to have closing costs back then too. Let's just add that to the sales price. Well, that ability is not there like it used to be.
Because of appraisals.
Because of appraised value, because you can't have more than appraised value, and you want to see a deal fall apart at the end, have your house appraised low, or have your seller do something silly like, well, I'm not paying that $6,000. Well, guess what? The minute you say that, buyer can go away. So,
and we really need to start having those tough conversations with those clients of, okay, if the price goes down due to the appraisal, you now have an appraisal in hand, and you're going to go back on the market trying to sell it for that higher price, but you have an appraisal saying that it's worth less. So you're not going to get it.
Right.
You're not. Sorry.
Absolutely. So again, market's shifting, market's changing, markets change all the time. Usually there's small little changes. Part of your job when you're running your business, because you're a realtor and you are in business, you have to keep up with those nuances and all that stuff. And that's one of the things we're here to help you with.
Trying to.
And if you ever have any questions or comments, please feel free to write, text, message, find us.
Send us a message on one of our platforms, but also go ahead and subscribe to us. And please let us know in the comment section if we're helping you, and let us know if there's something that you want to hear about specifically that we can help you out with. So yeah, all of our platforms, I've mentioned them a few times: Instagram, Facebook, YouTube, and wherever you get your podcasts. So
yeah, find us. Yay.
All right, guys.
See you later.
Have
Bye.
a good week. Bye.